Good afternoon, everyone. I'm Nasser Al-Nasser from QFC. We're welcoming all the guests who are physically here and online. Due to the pandemic, we only have 11 attendees, and we would like to have more Fintech talks later on, but this is the first one. This is a Fintech circle that we have here, we're in today. This is an initiative by the QFC to host Fintechs and have a launch pad for them for their first year. And today we have Marwan Maroof, who has over 30 years of experience in the IT industry and is the co-founder of Doha Tech Angels, who's under the QFC license and has been working for at least 2 years now. I'm handing over the floor to Marwan.
Thank you, Nasser. And I would like to thank the audience, Mr. Yusuf Jeda for being here, and all of the attendees. Nasser, thank you for the introduction. As this is the first one, so I guess I'm the guinea pig in the whole thing. I can't find the clicker, so maybe I click it with my hand. I know this looks like a very congested agenda, but it's all interconnected, and we should see a flow of the information. The reason I'm doing this is to instigate and to encourage people to ask questions to themselves, financial institutions to also ask questions, and maybe hopefully have a proper fintech hub established in Qatar, something I would be extremely proud of. Initially, the financial industry itself is about estimated to be $26 trillion as we look at it at the current time. The current fintech disruption landscape is very much around payments, banking transactions, insurance, asset management, and wealth management. With all of this, the global fintech sector is estimated to be $125 billion. So 75% of this is with small and medium fintech startups, which is about a maximum of $50 million turnover, and the rest is with the unicorns, the likes of PayPal. The reason I mention this number is because it's really tiny. It's less than 1% of the financial capitalization worldwide. So there's really nothing to worry about. Banks are always worried that fintechs will change them and will cause them to be less profitable and have an issue with their clients' retention. And we're trying today to reverse this whole concept, and hopefully we will be successful. The new fintechs are being driven around financial inclusion. So after they have taken enough market share, and they are still growing in the what I would call traditional banking, they are now moving into inclusion and microfinance, which basically represents around 1.7 billion people who are currently unbanked or not bankable, either in loans or in debit cards, and they usually rely on cash to do their daily transactions and to manage their businesses. There is going to be a major disruption in this field, as we're looking a lot at the new pipeline, as we have our own Doha Tech Angels. A lot of what we are seeing is engaging social media platforms, the like of Facebook, eCash, and even blockchain. The issue with the difference between a normal economist and a behavioral economist is very important for the future. Behavioral economists look at human beings as dynamic. They have a psychology, they have a society, and they are also reasonable decision makers. While the traditional economist really sees them as an economist, and they see people as very static. The tables have turned over the past 8 years, and we have seen the likes of Thales, who really won the Nobel Peace Prize, basically on his theories around the behavioral economics and the impact of that on game theory. What is important for us to understand There are so many principles around it, but one of the most important ones is the bounded rationality, which basically says that human beings do not want to make 100 decisions when they want to get into a product. Either it's an investment product or even signing up in a bank or signing up online. So the new technology is using robotics, which we call bots. But they are not mechanical bots, they are more intelligent, artificial intelligent bots to help them make decisions, and those decisions are made by the bots based on behaviors and statistics that they have gained over time. They use very sophisticated algorithms, and those algorithms run on the likes of Facebook platforms. They really don't need to run on major technology platforms. AI makes this possible only by analyzing and selecting most of the choices while leaving 3 to 5 options for the client to make. This is the likes of Robinhood stock trading, very, very few choices to sign up. They are keeping their customers, and the retention rate is very high, and the rejoining rate is even higher. I don't know if this is the same to say about the banks, but I can see this now. Most of the mobile applications are becoming much simpler, much easier, less things to do, more suggestions by the application, and that's where the intelligence comes from. And we're starting to see it even here in Qatar. There is also a social responsibility factor. So the likes of Akram and Stash have worked around saving even what we call fractions of pennies, and they take those fractions and they put them in savings accounts for the customers, therefore encouraging them to grow their wealth and their wallet size. Disruption and innovation, 2 words that keep going around. We're all afraid of disruption, but we're all happy to have innovation. Unfortunately, they are being used interchangeably, and the reason is mostly all of the new technologies have a hype start. By this, I mean, even if you go back to the internet days and Amazon when it first established, they all hyped to a certain level. It was a bubble, and then it exploded for 3 years. And people started to go back and investing. And now it's something you can trust. VCs are starting to invest in it, and the adoption rate has completely changed. The globalization takes over usually after 5 to 6 years from the first burst. And we will see this, I believe, even with cryptocurrencies. Cryptocurrencies were hyped at a certain time, and they have exploded in many ways. And now they are starting to take shape in order for better regulations and better technology consumption around them. Data and behavior remains the most important key in the sauce of customer acquisition, profitability, risk management, and retention. Data used to be only with the banks, now it is everywhere. Everybody can be a bank, and we can see so many of them around. Even m-commerce sites are becoming banks to finance. Social media platforms are becoming more and more trusted. I was one of the people who wouldn't even sign up to Facebook a few years ago. Now I know that there is around 90 million businesses that exist on Facebook, and a big society that does not even have bank accounts have Facebook accounts. We need to work on cooperative models. By cooperative models, I mean the local banks or the international banks need to work with the innovation and the startups. The innovators cannot be in a bubble working alone, and the banks cannot ignore them. There is a lot of interaction that can take place that will help both parties. And we are seeing this happening more and more with a lot of regulatory support, like we see here in QFC. Incubation centers, the mentors, access to information, and even demand simulation. The IP monetization part, this is something I will have in the next slide, but it needs to be viewed as a valid asset that we need to continue to invest in. And this mainly comes from the large institutions in countries like Qatar. In many other countries, the situation is different. I think I skipped a slide. Yes. What we are looking at here is the amount of spending corporations like banks make in the process of product development, problem solving, risk management, even marketing, cybersecurity. There's a lot of code being written, and this code is amazingly commercializable. The intellectual property itself is not captured, it is not registered, and it is not monetized, and it is not even bridged to the private sector. So people who work on the banks, they take this idea and they go somewhere else to monetize it, while we believe if this cooperation took place, those people can have partnerships with their own institutions, and those partnerships can translate to a better product and a better commercialized value with global reach. Many of those technologies are currently kept as secrets. Every bank or every insurance company or every investment bank keeps his own algorithms and all developments and black boxes, believing that this is competitive advantage. Actually, it's the complete opposite. I will give you an example. This is a company called Cartech. Cartech basically was two Arab-speaking programmers, I think both of them are Iraqis, they developed a system inside a bank in Jordan back in the 80s. And after the Iraq war, they decided to move, even before the Iraq war, they decided to move their whole families to London, and they resigned from the bank and took the same idea. I wouldn't say took the same code, because that would be IP infringement, but they developed it into a company they called Cartech. Cartech was selected by MasterCard and Visa to be the fastest way to convert to credit card usage. Back in the early 90s, this was a big deal. It was also something that was viewed as hype and later on took over. And since then, and until 2005, they had 25 of the largest global banks and 2 of the largest global card issuers and 190 of the banks globally. And they operated in 70 countries out of their office in London and an office in Cyprus, I believe. In 2005, Cartech was acquired by TSYS, which is a Tata Systems company, for $55 million. Now, this number in 2005 is big. The same company now would be sold for $500 million. But at least we see how an IP could have been captured and could have been improved, and could have been shared, and jointly commercialized with the banks. Social media is again, something that is taken over. The complete conventional methods of communications are changing. Everybody is online, everybody is communicating, and now even education, digital health is moving to that sector. Many of the new startups that we are seeing all use those platforms, which means they invest very little in technology. They only invest in actual intelligence and algorithms. The company I want to talk about today is called Shop. Shop is actually registered in Singapore. They were one of the first investments DTA made, and Shop is very focused on capturing the microloans that are given to home businesses. So let's say, and those loans do not exceed $100 to $200. But each loan was costing the bank $10. Shop came and said, I'll make it cheaper for you. I'll do an algorithm, I'll do analysis, and I'll give you the same result of recoverability. And that recoverability was proven over time. And they were able to reduce the cost from $10 to $4. $6 per transaction, and in the transaction $100, that's a lot of money. So the banks came over and they received funding from many institutions that are trying to improve overall adoption in poorer nations like Bangladesh. And it was launched in 2017. We were, and and the guy was actually sitting in his pajamas. In Singapore, it was Ramadan, I remember that. And he was pitching and he was sitting in his pajamas and having coffee. But his presentation was so good, and we just kind of believed in him. And one of our founders was already an investor and a board member, so that helped us a lot. We were followed by Bill and Melinda Gates Foundation. They invested $1 million. And now The company raised, I believe, 22.3 million through Sequoia, and it is now funded by $28 million. And this is, we're talking about 2.5 years. The company has basically created a one-stop shop for moms or females in the Bangladeshi society. And if you know Bangladesh economy, 70% of their exports are those people. Even though they're very small, but given the volume, that volume was translated into major economic value. So they empowered women, and they are eradicating poverty. The same company is now entering Pakistan and entering India with new capital. One of the best investments we made. But what is good about this is, I was saying earlier, you need to be also socially responsible. You can't just have an investment for the sake of money. Society will carry you and help you and solve your problems if you are solving a problem. And you are not just creating a profitable model. Nobody ever thought that it will reach the stage, but thank God, we see this as a future unicorn, and we are monitoring it very closely. Another company I want to mention, which is converting the need to use cash into something completely different. Playing a game. Rather than paying for your bills or utilities, whether it is water, electricity, or telephone, you play a game on your mobile, and that mobile will be feeding you advertising, learning something about you, and you will get points towards your utilities, depending how many people play with you and how many people join you. And over time, it has proven to be one of the most interesting products. We had little doubts about it because it works with telecom operators, and telecommunication is very highly regulated, and they were doing most of their business south of the American border. So they focused a lot on Mexico, where this meant a lot of sense. People did not have enough money, and they wanted mobiles to use, so they played games and watched advertising, and they watched movies in order to pay for that. Not a bad thing for economies that are unbanked. This company now is growing very quickly. It has 63 million users already, and it is aiming to grow 5 times in Asia. They haven't yet entered Asia. Most of this is south of the border, and they're growing now in Asia, UK, and Europe. They launched in 2015 with an angel round with DTA. Doha Tech Angels also was one of the first participants. And we also have one of our members on the board. We do not have controlling stake, but we add in our knowledge, and we help them out. One of their major partners is AT&T, and recently Ooredoo entered through Indosat. So that's why I mentioned Asia. Indonesia is a very large economy for such products. Next generation, what's going on? Where is the ecosystem going? And in the absence of thinking of what's going on with the existing banks carrying still core banking technology from 15 to 20 years ago, and they're having to build many units of support around it, introduce beautiful products in the front, but their main technology is fading out. More and more banks are starting to move to the cloud, even though there is resistance from regulators, but banks cannot afford not to, especially banks that are not highly capitalized. So many of the small banks in the US are already moving. India, in huge quantities, they are moving to the cloud, and we're starting to see it in Europe as well. But Europe is a little bit worried about data and data sovereignty. And here is my whole question, and this is an opportunity also we need to view. Data sovereignty is a question that rises up and comes to the table. How much of your data do you want to put offshore? Europe noticed that 90% of its data sits in American databases. And now they are introducing regulations to change this, and like I don't know if you've heard of GRDP, there are also Russia that is completely sovereign. They refuse to put any data outside, and China is playing the middle place. They have this and they have that, and China is big enough to afford anything, I guess. So regulators are now challenged with this. If their regulated entities don't move, they will lose technical advantage, and they will not be able to do what the others are doing. And if they allow them to move, the data is exposed. So we're looking into ways to create companies, startups that are focused on cybersecurity and encryption to keep data elements, the critical ones at least, within your borders and under very high security standards. The cybersecurity agenda is definitely changing. The adoption is increasing, and in the presence of the new 5G, things are moving lightning fast. The cashless, I mean, I wanted to introduce also one of the companies we are talking to in Qatar. It is called Skip Cash. It's established by Muhammad and Saoudat Layli. They have also another founder with them. I have been talking to them for at least a year and a half. And when they first talked to me, they said, what should we do? And I said, you should cooperate with the banks, because disrupting the banks will not help you in a small economy like this. And they figured out ways to introduce new features, point systems, loyalty programs, making it easy for everyone. But what they have created in the process is an m-commerce platform without knowing it. So anyone in Qatar, any coffee shop in Qatar can now receive a payment using a mobile payment. So it is cashless and it is completely connected to their platforms. In addition, they have obtained a lot of support from the likes of Visa. I believe QNB is also supporting them very much. And they are expected now, they are in their, what we call the stage where they tested, like a dry run. They will have 300 users and I believe 10 shops. And they will be moving very soon in 2021 to the actual market. They are now raising their seed. So far they haven't raised any money. It's all self-funded, it's bootstrapped. And we have been talking to them, asking them to invest, and they say, well, we're not ready for it yet. And I like this about them because they're really doing their job, and they're not looking for the investors before they are ready for the investors' questions. And that really took guts. Currently, they are raising around $2 to $4 million, and I hope this money will come, a lot of it, from local investors, whether they are private family offices, maybe Qatar Development Bank, QSTP will participate. We are definitely going to look at this seriously, and hopefully we will also be part of it. DTA, I wanted to give you just an idea because I represent DTA, therefore DTA has a very specific process to evaluate companies that are coming to bid for investments. Those processes are actually available for them. They can look at them before they join. We advise them to fill a certain template. We advise them to follow a certain process. We have a screening process. We look at market opportunity in various details. We look at the problems they solve, whether they have identified a problem that needs to be solved or somebody else has solved it. And also, we look at the business models, the market approach, and the risk side of it. We are really worried about the regulatory part, and we are always trying to avoid, investing in a company that has not looked very well at its regulatory or at its regulatory frameworks. All of this comes with a global pitch. All of this. It is not here, but I put it there on the top. Globalization of the product and demand really changes everything. And if it is a globally available, if it has global potential, then we are willing to work with them and be part of their future. I believe, that's the whole presentation. So I'm available for any questions and answers that you may have. You need a microphone.
Indeed, we do.
You have to be close to the microphone.
Indeed.
Go ahead.
It's a really insightful presentation, and you guys probably are one of the few tech investors in the region and in this country. And so my first question is actually, the current crisis is going to have huge impact on behavior as well as the adoption of tech. And where do you see the most opportunities from a local perspective? Because the infrastructure here has yet to be, fully developed, so there must be interesting opportunities.
You mean crisis, right?
Yes.
Okay.
Relate to the crisis.
Oh, the COVID crisis.
Yes.
Yeah, there is always a crisis. Whether it is COVID, whether it is oil, whether it is wars, we're always looking for opportunity in crisis. So for us, a crisis is actually an opportunity. Yes, some of our investments do suffer, but others flourish because of crisis. And Qatar flourished because of crisis. This is a completely cashless system. So in COVID, nobody wants to use paper. The same thing happens with Skip Cash. Anything that removes the use of paper and digitizes the background, that's something we would look into. And we're seeing huge growth in that direction. But at the same time, you will see that Facebook, for example, has just started to do its own business products because they have seen almost 40% of businesses have closed down. We're talking about mom and pop shops. Small, this is in the US. And they have created a completely technological platform to allow them to continue to exist online. So there is going to be a migration from mortar, what we used to call brick and mortar. More and more will be migrating to the digital world. And any crisis will cause this to happen. But at the same time, there is also a need for us to look around us. You know, each country has its own little special needs. Like in Qatar, we are hugely dependent on bricks and mortar. A lot of our banks have put investments in bricks and mortar. Very little was invested in digitization. And I say this with my experience in banking. Even though we were one of the biggest investors, but still, the investments that we are looking for, the complete change in paradigm hasn't yet taken place. So there is huge opportunity that is coming, and if we do this, they will be able to attract global clients without even being globally registered. We go out and we register in many countries while business can be managed completely online. I don't know if I answered your question.
You do. Thank you.
How do you alleviate the concerns of investors, especially when it comes to the recent frauds like Wirecard? Even Robinhood had a couple of billion missing.
Yes, I mean,
It seems like there's a trend of
there is a trend
fintech
around wallets.
wallets.
Yes, there is a trend around wallets, and I don't. If I showed this in my presentation, in the localization I had, I will just go back to the one. See, in this one, I meant clearly we are asking for localized e-wallets. This is where we feel that there is major value to be touched and major problem to be solved. You cannot rely on wallets that run cryptocurrencies and blockchain. Wallets need to be localized, protected, and clients need to be also protected. As much as banks protect their clients and what we call the all of the central bank papers that I've read, even their strategies, focuses on the prudential policies. The prudential policies basically make the banks build their systems around protecting their depositors. Depositors comes first, and a wallet is just a deposit. But that also needs to be localized. And I would not put my money in an international wallet. I would not put it in a cryptocurrency wallet. No matter what they say, it's not safe. At least when you are in the regulated area and you have a problem, you have somebody to go to, and you have a resolution process. Visa and MasterCard used to resolve issues. SWIFT resolves issues. The world of digital open wallets hasn't yet been resolved.
Good afternoon, thank you for the presentation. Speaking of local wallets, C-Wallet is actually a country wallet and represents 6 of Qatari partners that all classmates in HEC. We're live, in fact, we're probably the only live wallet in Qatar that is not a corporate or a bank. The main struggle that we're facing is actually getting a banking partner because
I can barely hear you. If you would quite come closer.
Yeah, I would. So
Sit on my chair. The blue one. This is
the
proper
business
startup.
chair.
I want to give him my money.
So we are C-Wallet, we are local wallet, and we're actually live. We have tractions and transactions. We're talking directly with Central Bank and Sunblock's program. We're part of Qatar Fintech Hub. And the challenge we're facing is actually partnering with a financial institution, because we're not allowed to hold people's money. With current trends, with current mentors, they're actually a value that we bring to the banks, but our main struggle is to partner with them. Funding, yes, it's not a problem. I think it's very feasible to actually have it in Doha. In fact, we're closing our angel round with an angel investor. Hopefully we can touch base with Doha Tech Angels soon. So I think that's our main struggle is just banking partner.
I think this is the exact problem I'm presenting.
Yeah.
There is not enough cooperation taking place. And I don't know if it has to do, like the guys in Skipcash I was talking to before they established even the name Skipcash. I haven't spoken to you, so I don't know your journey enough to answer your question. But maybe somewhere along the line, you were not building a business model which would work as well for them. Or maybe they're just trying to capitalize on the e-wallet themselves, and they will never give you their data anyway. This is not something the bank would accept to do. They are regulated against doing this. So they wouldn't break any rules. You have to figure out a way that this data is encrypted at least and owned by the bank, which means you cannot see a lot of it and they can see all of it. And maybe there are a technical solution to your problem. And maybe it's just better communications with the banks. But definitely, in the absence of cooperation with the banks, your startup will not thrive because they own all the accounts.
Can I add to that? Because I noticed that the banks have been sleeping over years. Suddenly fintech comes up, and now I see the banks waking up and doing innovation themselves because they realize, these guys can do it better. Either they purchase fintech companies, they partner with them, and they would like to keep the other ones out. So, to a certain extent, it's good because then at least innovation is happening. So that would be one observation. The other thing is that I see in some markets, even UAE announced now what they called vault expertise or something. So I can see that happening in Europe as well. In my country, Netherlands, the fintech companies are allowed to keep the customer's money in a separate entity, which is separately escrow, separately regulated. So you don't need the banks. If you do that, then suddenly the fintech companies can grow further without the banks.
Yeah.
What do you think of this?
They're missing the opportunity. Again, there is a lot of missed opportunity in cooperation. An IP transfer, cross transfer. If they had developed something, I'm sure they cannot commercialize it as well as a startup can. And they cannot move it, and they are not so close to the society or the development. Banks are very complex beasts. They are heavily regulated. At the same time, the demands of the investors are high. And they are always asked to make more money. And what is the ROI? Are you familiar with game theory? Cooperation versus lack of cooperation?
No, but I'm sure cooperation works always.
Yes, but there is a very simple example that I want to mention. If we were all sitting around the table and trying to get a pizza, and one of us wants to take it all for himself, we will go and all fight. One of us is going to buy the pizza, pay the whole amount, and eat the whole thing. I don't think it's good for him. If we had all agreed to share the cost of the pizza and share the benefit of the pizza, that would work much better. So even though we all have conflicting interests, we need to find common grounds. And those common grounds need to be very well absorbed by the banks. There is a maturity issue, and some banks are very open to innovations, others are very close to the innovations. And I think this is something we have to tackle. That's why I'm raising this problem, because you are seeing this problem. And I saw this problem myself. The future has to be built on cooperation, because other nations have cooperative models which is making the startups big, and they get funding in the tens and 20s of millions, and then they will be coming here, and they will steal our clients and they will steal our transactions. So if we don't do this ourselves, somebody else will do it for us and take it away from us. So
is that the reason why Singapore is, for instance, a very enriched environment, because I really like your shop up example,
Yes.
right? You know, the idea originates from somewhere else, and the talent come from somewhere else, but they choose to set up in Singapore. That's exactly what we try to do here. So, what will be your recommendation in terms of what can we do?
I mean, this is definitely a question of globalizing talent. First of all, our skill sets are in the banks. This is something I wanted to mention, and maybe I mentioned to a certain extent. The most intelligent people we have are employed in the financial sector. Are employed either by banks or financial institutions or investment companies or private, equities that are hidden somewhere. Those skills are not monetized outside that, and usually we don't have a way to bridge their innovation. And all I'm saying is we can make this cost so much lower because, I don't know if you've, the actual, the R&D is not, the spending is not actually captured. It is viewed as a salary. He's a programmer. He doesn't really know which product he developed or which product he's maintaining. So it's part of a big expenditure bucket. But those people can also help the startups and should help the startups because they know a lot and they have worked in environments, stress environments, highly developed environments, and they're going to be missing the boat if they don't make the bridge. A lot of them are thinking of going and establishing their own businesses and take the risks like you have. But others are just very happy to make, the kind of income they make, which is not bad also. So I believe in Singapore is a different story. The skill set in Singapore is different from the skill set in Qatar. And if we keep importing skill sets, that's also a mistake. We need to allow skill set to be virtual, number one. And we need to allow existing skills that are employed by our organizations to have the ability to take their innovations and make them wonderfully available with wallets like you. Sadiq, you don't have a question?
Of course, you have the last question.
I don't know if I covered all the subjects.
Do you have any questions on that?
I'll give you another example, since we're talking about this subject. In 2004, I worked for a bank. And we created, we had spent a huge amount of money on upgrading our technology. But at the same time, we knew that this upgrade did not mean anything to clients. It's all in the back end. They feel nothing. So if we made an announcement, it would mean nothing. We decided to introduce something called Encrypted Xml Statements. In the absence of XML suppliers, and in the absence of encryption suppliers. And we had to develop this in-house. So we hired a guy, he was a great Java and C programmer, and he developed the code for us, and the code went live in 2004. And for the first time, our clients were getting daily, are you familiar with XML? XML is basically a format that you can immediately import to various databases. So it is a database on its own. Rather than using standard text that goes out, we said let's do something interesting. And we added on top of that encryption. So we introduced for the first time VeriSign, we brought on the little devices, and we had smart cards at the same introduced for people to be able to trust what is coming to them. And that was one of the best products that was developed. And there was nothing in the market. I mean, if you made inquiries with any banking supplier or technology supplier, they had nothing like it. The guy left and moved to the US and established a startup and redid the code. Even if he copied the code, we wouldn't have sued him because we knew that this could leak and anybody could do it once you know that it's been done. You don't even need to reverse engineer it. If it's an idea, it can be done by anyone. And he monetized on it. And he has a complete startup around it. And he sells the startup for an amount I don't want to talk about now. But I feel so bad, and he was only 27. And amazingly intelligent guy. He just left the bank, he got bored. So what do we do with these skills? What do we do? When they leave us, why don't we keep them connected, add them to the talent pool, because they know the market, they know society, they know client problems. And they would love to do things with you if you give them
Yes.
something.
So fintech is a struggle for talent, not for money, to a certain extent.
Yes.
And one of the questions I always hear from fintech: how can we protect our brand, our trademark, or let's say C-Wallet or Skipcash? Do you have any experience when you invest in a fintech company? Where do you look at? How can they protect their concepts?
Yes. Well, the algorithms are the most important IPs.
Okay.
And I'll tell you, Play to Pay actually was called something else completely. I even forgot about it. It was called Adform. And they moved it and changed even the brand name. So they were not interested in the brand. Brand is something that people will get associated with success. Whatever you call it, whatever you change it to, people will continue to use it. But what matters is the IP of the actual code, the algorithms, the AI part of it, the data you own. That's also part of your IP. That's the one we make sure we are part of, and we put a lot of time to make sure we are part of.
And I think in addition to that point is the government's approach also. If Qatar is pushing for a cashless World Cup and a cashless society, then everyone should be part of it. And this is the story of Paytm in India. They were like over 10 years operating in the market, but when the government turned into digital currency, when they removed the old currency, the entire 1.3 billion population went cashless.
Yes.
So it was like in one day, you had tremendous amount of people. So I think there's the government's role is also vital.
Yes.
And crisis also, like Airbnb got populated in Uber. When there's a crisis, people are allowing people in their houses,
Yes.
strangers on their cars.
I mean, FIFA is a separate thing because FIFA has its own interests and its own brand it needs to support. I don't know if it's Visa and MasterCard this time, Pepsi or Coke. They always have, or Toyota or Hyundai. They want to protect it, and when you have a FIFA relationship and a World Cup, it is a very complex. You need to make sure that those rights are protected. You cannot introduce competing products. All of this is something that we need to keep in the back of our heads. So again, why I like Skipcash? Because they cooperate with Visa. Visa is their enemy, but at the same time, it's their friend. Always, you need to find common grounds and convert your competitors to cooperators. And this is really the trick in handling this. I don't know how you do it. Each startup has its own little differences, but that's really the way to go.
I think the Visa's fast track program allowed Skipcash to be part of it, and we are ongoing on the same process.
That's great because once you are certified by Visa, then you meet their security standards, and all the banks suddenly say, "Oh, Visa is already approved. We can work with you." Even if it's just a stamp, I don't know how much they impact you, but even if it's just a stamp. Because once you say, "I accept anything that has a Visa logo," although you're moving to cashless, and cashless is not always something countries want. Each country has its own different set of requirements. And in Qatar, I don't know really when are we going to go in that direction, or whether we need to. But at least we need to continue to convert. Now, maybe I showed you in the Skipcash part, they have a specific number they have shown. There's much more data around this, but basically there's about 160 billion being dispensed by the ATMs. True. Not counting what is dispensed by the banks themselves, people with banks, either in or out. So this is extremely costly for ATM operators, for security companies. You need to hire. Having an ATM network is no longer profitable. It used to be. Now it is actually a cost. So the bank's interest really is to move. At the same time, banks see it as a brand. They see it as a branch. You were talking about brand, so any logo would help. Let's put an ATM here, and that logo will bring the right clients. They're hoping that the guy would go next door and take a loan, buy a more interesting product. But they're really a cross-sell device more than it is an interesting device. And I believe our system here allows for the spread of it. The whole NAPS transactions methods and clearing, and who makes what and what. Everybody's competing for space, but everybody is now losing the space.
especially with the WPS. It's coverage protection system is there. You can withdraw any.
It's costly, but
Very costly. Even point of sales are loss making. What they like is the account that gets deposited with them. That makes money.
Yeah.
And how many of those are actually? Very few, I would tell you. It's only about being there, having access to the shop, giving them a loan, taking their staff salaries, giving them more loans. You know, it's all about booking assets. And for this, you need volume. And the more you get volume, the more you are able to book assets. But it's not really a transactional money-making machine.
Okay. Any more questions? One more question?
Yeah, we have a question from online audience.
My wife. When are you coming for lunch?
Yeah. When do we expect to see cryptocurrencies being used in Qatar? As it seems that there is a will to introduce it to the market, and there are many fintech solutions being introduced.
I was avoiding talk about cryptocurrencies. I don't encourage the use of cryptocurrencies simply because they haven't, you know, when we talked about the bubble, I'll go back here. Oh. New and exciting technologies are hyped, and blockchain-based currencies are hugely hyped. We had so many startups we looked at, all who want to do currency IPOs and their own digital currencies, and I don't believe that this is something that actually has value at current time. I'll give you an example. At the end of the day, Bitcoin in 2017, Bitcoin alone, in 2017 was consuming as much power as the whole country of Oman. They are one of the most polluting industries you can think of. The algorithm was created to impact scarcity, and scarcity manipulation is extremely dangerous. It's almost like you're saying, oh, there is less of gold. No, there is no less of gold. It is just making it more difficult for the computer to do the encryption and to break the blockchain block, and for them to come back and give the results. And again, I was talking about game theory. Do you know that the whole world is trying to break this message, not just a single computer? So all of this is being wasted if one of them wins. The algorithms need to be more sensible. They need to be more socially responsible. And they need to be regulated. I hate to see currency that is not regulated because it ends up going to the underground. And mostly it's dark web transactions that we are seeing. There are other cryptocurrencies which make more sense, where banks are starting to look into it and regulators, but in the absence of regulatory clear direction and clear understanding of this value and how to make it work without hurting the existing system, I wouldn't go into that direction. But this is like a whole different presentation.
Yeah.
That would take me another hour.
Next time.
Yes.
Yeah. Okay, thank you.
If there are no further questions, then I would like to thank you, Marwan, for delivering this very exciting presentation. You are the first of a series of Fintech talks that we would like to host here. I think this is already interesting. I know that many people are listening in, are listening in, specifically all the Fintech companies from the Qatar Fintech Hub. They're interested, of course, they would love to talk to you as a representative of Doha Tech Angel, the founder, and hopefully, you will see opportunities in them, for sure. And we hope that many Qatari investors, family offices will follow your example and also start up opportunities to invest in tech.
More clubs.
More clubs. More investment clubs.
More clubs.
More investment clubs, and then we will make you a fund.
Yeah,
I think that's the next thing. So we have a small present, so I'll ask Nasser to hand over the question.
Nasser is the guy I gave a hard time. He gave me the hardest time.
Yeah, should we open it?
Wallah, ya Reet. Can everybody see it? Is it a book?
No, it is.
It's a book. Is it my debt I have to pay back? Yeah. Oh, this is like really amazing. is amazing. Thank you so much. Really, of course.
Thank you.
تعرفوا مروان الشغب سمعتوا عنه؟
Yes, I think
This is actually مروان الشغب.
Yes,
I have a big picture of it. Thank you so much.
No problem. Thank you for being the part of the
طلع مروان صح؟
غزال
غزال يشبه مروان يمكن ولده.
من نفس
الفصيلة ما شاء الله. شكرا.
Thank you again, and thank you, audience,
Thanks.
and hope to see you next time.
إن شاء الله إن شاء الله. With a better clicker.
Yeah. Thanks.